How you doing? This is Ezra Socias, CEO of First Priority Credit Solutions. Thank you so much for allowing me to speak to you today about credit. My goal here is to give you all the tools that you need to qualify for a home under our Pathway to Homeownership program. Okay, so I'm going to go over credit, the basics, and give you exactly what you need to know to qualify for a home in time. Okay, so first let's discuss your credit score. Okay, basically the real credit score that you have is called your FICO score, and FICO stands for Fair Isaac Corporation. It's broken up into a pie, and what I want to do is kind of go over that pie so that you can understand exactly what impacts it, so that you know exactly how to increase your credit score as quickly as possible. Okay, the biggest section of the pie is payment history. That's 35%. Okay, so when you make payments on time on your cars, credit cards, things of that nature, that all impacts the highest percentage of your credit score. Okay, so also if you miss payments or if you're late on payments, 30 days, 60 days, 120 days, whatever the case is, that's impacting the biggest part of your credit score. So you want to make sure that your payments are made on time. The next section is going to be credit debt ratio, or also known as credit card utilization if you have credit cards. Okay, so any debt, any balances that you have, whether it's a car loan, school loan, mortgage, it all is lumped up into this 30%. Okay, so that's why it's so important that you stay below 50% of your credit card balances, because if you go over 50% and max your cards out, you're negatively impacting 30% of your credit score. The next section is going to be length of history, which is only 15%. We don't really spend a lot of time focusing on that. The other section, the 10%, is going to be types of credit or account diversity. So if you have a school loan, credit card, auto loan, is this having multiple accounts? And then you have your recent credit. So any new accounts that you open impact 10% of your credit score. So that's basically a FICO score. That's how it works. So when you go to Credit Karma or any of these other websites that don't say it's your FICO score, the score is not your real credit score. Okay, so a lot of people go to Credit Karma and think that's their real credit score. I'm sorry, that's not really your credit score. It might be 10 points off, it might be 50 points off. It's just there for other purposes, but it's not really your credit score or FICO score. Okay, so let's move on to how to increase your credit score quickly. Okay, the fastest way to increase your credit score is going to be through credit cards. The reason why, because credit cards impact your credit in two different ways. Okay, so when you have a credit card and you make a payment on time on your credit card, that impacts this part of your credit. So 35% of your credit is going to be impacted immediately because you made your payment on time, which is great. But also, if you stay below 50% of your limit, that's going to impact this section right here, 30%. So one credit card can impact 65% of your credit score. So that's what we recommend our clients to do. If you're looking to increase your credit score, when you can go out and get a regular loan, a car loan or something like that, that's not going to impact your credit the same way a credit card would. Okay? Now I know that a lot of people are afraid of credit cards. They're not comfortable. They don't like using them. So we do have advice, and we have a technique that we can kind of give you this a fail-safe way to protect yourself in that matter. But regardless, numbers don't lie. This is the fastest way to increase your credit. Okay? There's really no avoiding it. Okay? So the key is secured credit card. So I have SCC there for secured credit card. A secured credit card is a card where you actually put money down to get it. Okay? Companies like Capital One, First Premier Bank, there are a lot of other companies out there that you can actually give them money. In exchange, they'll give you a credit card and allow you to increase your credit score quickly. Okay? So of course, you want to make your payments on time as well. So you get a secured credit card, stay below 50%, make your payment on time. That's going to increase your credit quickly. Okay? Another quick way is called the authorized user. Authorized user is if mom, dad, somebody says, hey, you know what, I'm going to help you out. I'll add you to my card as an authorized user. Okay, I'll call my credit card company. Once they add you, their payment history is going to show up on your credit report. So that's going to impact this and this. Okay? Now, this person, you always want to make sure that they are below 50% and that they make their payments on time. Okay? That's key, because if they aren't making their payments on time, and if they are over 50%, that's going to impact these two buckets negatively. So you're going to negatively impact 65% of your credit score if that happens. Okay? So you never want to do that. And the last option is going to be a secured loan. A secured loan is when you actually go to your bank with, say, $1,000, and you ask them for a loan on that $1,000. What they'll do is they'll cut you a check for $1,000, and they'll put a hold on the $1,000 that's in your account. Okay? And they'll expect you to make a monthly payment on that loan. This is a good way to set up, payment history. You make your payments on time, that's going to impact 35% of your score. But as you can see, that's the only thing that it's going to impact. It's not going to impact anything else positively. Actually, it is going to go in here also, but that $1,000 is going to go in there as a debt. So it's really not helping you. The payment history is helping you, but it did go into your debt bucket, so that's not really a great thing. Okay? So this is basically that's credit in a nutshell. That's how it works. Okay? Now, a lot of times customers have negative items on their credit report, and they're like, okay, well, I have collection accounts. What do I do? Where do I go from here? We're going to discuss that, but I want you to understand exactly how to build and establish credit first, because that has a huge impact on your credit as well. Okay? So let me go ahead and erase this. Okay? And then we can kind of go over some other stuff. So we're going to deal with the positives first. And deal with the negatives last. Okay. So, you want to get a house, you want to put yourself in the best position to become a homeowner, this is what you should do. Regardless of what is on your credit, if you can qualify. You want to go ahead and get you that secure credit card. You want to get at least 2. So you can have one with, say, Capital One, and then you go to First Premier, So let's say you go to First Premier, you go to Capital One, and you get you a credit card. Okay. Say the balances on the card are $300. Alright? So both cards are $300 credit limit. Excuse me, not balance, but you have a credit limit of $300. Okay. What you want to do is use $70 on each card. Only 70. Okay? Then you want to put the card away. Once you put the card away, every month, you're going to get a bill in the mail that's going to say your balance is $70 because you've used 70. You can either pay that off, or they're going to say your minimum payment is $8, $10, or whatever it is. You want to pay the minimum every month on time. You never want to pay the whole card off. You never want to use $300 on a card and pay it off at the end of the month, or however that is. This is exactly how to use the card to guarantee that your credit score is going to go up. If you use $70, that's going to positively impact this right here, okay? Because, pardon my math, because then you'll probably have somewhere around $230 available. That should be right. And then that's going to be positive because your credit card utilization is excellent because you're not maxing that card out. So that's going to impact 30% of your score positively, and you're making your payment, the minimum payment, you're making that minimum payment on time. Okay, so that's going to impact 35% of your score. Again, so that's 65% that's being impacted. Times 2 because you have 2 credit cards. So that's what you want to do immediately. Okay? The next thing that you want to do is take a look at your credit report. Look for mistakes. Okay? We do credit repair here. We have an excellent track record of what we do, but in the event that you didn't want to sign up for a company and have a company represent you to try to remove the items off your credit, you do have the right to dispute items yourself if you like. It does take time, patience, and persistence, but if that's something that you wanted to do, take a look at your credit report, look for mistakes. You know, a simple mistake can be if an item is reporting on your credit for longer than it's legally supposed to. In most cases, 6 to 7 years is the time frame, so if you have a collection account that's up there for 30 years, 10 years, or whatever the case is, you can go ahead and contact the credit bureau, or you can dispute that online. Okay? Only mistakes. You never want to go in and just dispute items that are legally, that there's no mistakes on. It's just yours, you went into collections and you just want to dispute that. Typically, a lot of those items aren't going to fall off that way. You know, they can come off, but typically disputing them online doesn't do it. Okay? So you want to find mistakes on your credit and address those items. If there are no mistakes, the next option is called, it's called a pay for the lead. Okay? You never want to just go call all your collection companies and just pay them off. Because what can happen is you can lower your credit score by doing so. Okay? A lot of people don't realize that when you call them and you pay it, it doesn't come off of your credit, it's just going to update. And when that item updates, you do run the risk of having it lower your credit score. Okay, so contact the company, ask them to remove it prior to you paying it. Typically, a pay for delete is something that has to be negotiated in writing. So you can contact my office if you need help with the paperwork. We can just send you the paperwork that you can kind of send off if you want us to do a pay for delete. Okay. Now, typically, a pay for delete can be somewhat expensive because the less that you offer, the less likely they're going to say yes. Okay, so it really just depends on what kind of debt we're talking about. But you have to address the debt in that way, or you want to kind of, you want to contact a professional like ourselves, or have a company kind of address those negative items for you. Regardless, your credit score is going to go up by doing this, but to qualify for a house, you have to have a mid score, typically of a 640 to qualify. And what the mid score, the way that works, is say if you have 3 credit scores, say you have a 450, you have a 640, and you have an 800 credit score. Okay? The lowest score is going to be not count against you. The highest score is not going to be calculated. That's not going to count towards anything. They're going to go with the mid score. And that mid score needs to be a 640. So it's possible to have a lower credit score, and some of the other scores are where it needs to be for you to qualify for a house. Okay? So that's basically the way that the process works for the most part. Okay? Once your credit gets to a certain point where you do qualify, then the mortgage person can actually go ahead and get you pre-approved and tell you exactly how much house you qualify for. Then your real estate agent would take over and show you the house that you want and go to closing and help you buy that house. Okay? So that's basically how the process works. It does start with credit, but at the end of the day, becoming a homeowner isn't something that is very unattainable. It's very possible as long as you understand the principles and understand how credit works, and if you have the right support system and the right people to kind of help you. Okay? Again, like I said, this is my pleasure giving you guys this information, but if anything isn't clear, if you guys have any additional questions, you can feel free to call my office at 1-888-315-3635. Okay? I'll be more than happy to assist you, me and my staff as well. We'll be more than happy to assist you and give you any information that you need to assist you with achieving your goals of home ownership. Because at the end of the day, that's the goal of Pathway to Home Ownership, is to give you all the tools that you need so that you can qualify for a mortgage. Okay? Thank you so much for your time. I appreciate your business. Okay? And you be blessed.